So I'd like to go over an example of a trade I made last week. As you can see, today is the 17th. This looks like it was around Wednesday. Um, this is the Canadian dollar Japanese yen cross, and this is the hourly chart. You can see here we've got a really clean trend line that was basically, here's a bear flag. If you zoom out a little bit, we've got pretty strong move down, move up on the yen, so causing this, or actually down on the yen, or no, up on the yen anyway. So we've got this yen strengthening that occurred. I believe it was yen strengthening because it happened in a bunch of places. Pretty sure this was a news event. Yeah, it looks like a 7:30 news event on, what's it, Friday a couple weeks ago. I think that was an NFP or something. So anyway, we got this nice bear flag going on here. Really lasted a little too long. Usually when they go on for this long, you start to wonder if if it's going to go the other direction, or the directionality of it tends to be 50-50 when it gets to be this elongated, I think. So, but anyway, following this, you can see this nice clean trend line here at the bottom of this flag, and it stuff like this is just begging to be broken. That's why trend lines exist, in my opinion. You can actually play oftentimes a third or possibly the fourth bounce off of a trend line. Probably no more than that, but getting a third bounce is usually a decent move as well. So you can see here you've got two touches, and if you had been watching this, or if I had been watching this at 3 in the morning, 4 in the morning, this kind of reversal in here, and I might have looked down at the 30-minute or the 15 to see if it looked a little cleaner than that, but that's usually not a bad move, especially in a channel. I mean, essentially, you can say, yes, this is a bear flag, but it's really a channel at this point in time because the flag has been going for a while. And that third touch of the trend line is also, on some level, it's a third attempt for the market to move down. So you could have taken this on that basis alone. I did not, but it's something that you could have done, certainly. Basically probably not buying directly on the line, but waiting for the reaction at the line and buying there. And if you'd got in this looks like probably at least a 2.5, 3R that you can get out of it. Maybe a bit of a squeeze. A lot of times it's hard to know how high this stuff's going to go, but you did have the top of the channel, so you could have at least taken it to the top of the last piece here. So that's complete aside. The actual trade I took is the break of this trend line here, but I actually took it on the basis of this retest right here. So you can see here we've got this trend line. The price just sliced right through it on the hourly, and right here, and this I was paying attention to. In fact, I think I missed this actually. I think I actually caught it over here. I was looking at it in the afternoon, but said, hey, wait a second. We've got this breakdown retest deal. So I went ahead and shorted it. Yeah, I think it was in the afternoon. I went ahead and shorted up in this cluster, and then watched it tank down, and I think I got out early the next morning, probably. It might not have been good practice to get out down here. It might have been better to have the stop trail on the EMA. In this particular case, obviously, getting out in the next morning was the best thing to do, but I think probably in general on something like this, especially considering the previous move down, it would have been better to almost wait for that fully measured move down, which sort of assumes that it has further to fall. It may have further to fall now. Actually, in fact, I think I may have a trade on for that. But so this is basically a really classic trendline breakout, breakdown, retest scenario, where you can look at that and see that, hey, the market's actually respecting that. It means something. Trend lines are funny. Not only can they be drawn in many different ways, but oftentimes the market just doesn't care. But when it does, it actually does mean something. And you can see this is also a retest of the actual level that it broke down through. You can see the structure break here, where it goes down below this level, where the cursor is below this line, comes back up and retests. So this is kind of double in that sense. Different algorithms may look at this and be trading off the trendline break. They may be trading off a retest. They may be trading simply off the retest of this level. It's really hard to say, but you got a little bit of a confluence there, and then you can see it just breaks down again pretty well. It's also hard to say if this whole move down may actually just be the mirror of this, the end of this, or if this actually has further to go down, and we need to wait for potentially a longer, sharper move from this point. It's really hard to say. I don't know what's going to happen. So thank you, and until next time.